Hello, I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights to help boost your trading potential. Coming up, U.S. markets lower, U.S. inflation rate jumped to a nearly 3-year high, and higher oil prices are adding to investor concerns. Plus, our trader debaters, they are standing by preparing for liftoff as they tackle AST SpaceMobile, the company aiming to turn satellites into cell towers. After the stock's massive rally, is the future of wireless connectivity here, or is this hype just drifting too far into orbit? We're going to break down the bear and bull cases, then show you ways that traders can position for both sides using option strategies. And later, we're going to preview NVIDIA earnings, what investors will be watching most closely as AI momentum continues to drive the broader market. That is all ahead. Don't forget to like and subscribe. You're watching TD Active Trader Live. Half an hour to the trading day. Let's check on the S&P 500. We're pulling back from all-time highs. We did get that fresh read on U.S. inflation this morning, hitting the highest level since May of 2023, basically a 3-year high there. Prices up 0.6% month over month. That put the 1-year pace at 3.8%. But don't worry, once you strip out food and energy, which aren't a big part of my budget at all, core CPI increased 0.4% and overall still 2.8%. It is still above the Fed's target. Of course, this throws a lot of questions into play about what the Fed's going to get up to under Warsh when he takes the big chair. We're going to discuss that more later in the show. And of course, diplomacy has been stalling in the Middle East. Put it all together, and that's the S&P 500. Let's jump into the heat map. I want to take a look at what's pushing and pulling today. We got NVIDIA and Apple putting a little bit of green on the screen, but it's nothing overwhelming. We got a bit of a downdraft here and some big names that have made big gains lately, including Micron, AMD, Intel. These aren't big pullbacks, but these have been high flyers, so maybe a little money coming off the table. And now let's get to our stock of the hour. It is AST SpaceMobile. A little downward pressure today, but look at the run that it has had over the last several years. What are they? They're a Texas-based startup. They got some big ambitions. They want to build a global cellular broadband network in space. How are they going to do it? Developing a constellation of low-orbit satellites. And who's the competition? It's a little company called SpaceX. And the stock, despite its pulling back now, up nearly 6,000% over the past 2 years. That is pretty astronomical. Let's head to the desk and get the debate going over cell towers in space. Here in Amin and Jason Nanick from our TD Direct Investing educational team. Gentlemen, welcome back to the show. It's going to be a fun one.
Great to be back again, Greg.
Let's get going, but right before we get going, just want to remind our viewers that the securities and strategies discussed on our show are for educational purposes only and should not be considered investment advice or buy, sell, or hold recommendations. Back to the stock of the hour. It is AST SpaceMobile. We'll get our time on the clock. Each have your 2.5 minutes to make your case. Last week we flipped the coin live on air so everyone could see that, you know, that we're being honest about this. You got the bear case, Jason. Why don't you kick things off?
I did. I drew the bear card, so let's get into it. So everyone really wants to talk mostly about the dream of what AST is offering, or ASTS is offering, but investors need to focus on the gap between that story and actual execution. There's still a pre-profit company that's hemorrhaging cash, facing massive technical and competitive hurdles while trading at out-of-this-world valuations. And it's already assuming near perfect execution and success, and that's the long shot at best. Like one of their Bluebird satellites, they might be also returning to Earth. So this company is still burning massive amounts of cash with limited proven commercial revenue. Last year in 2025, they posted a net loss of $342 million, and with operating expenses climbing to $359 million. So that shows you the small amount of revenue that's coming in the door. ASTS still raising billions of dollars through convertible notes and equity offerings. There's a real chance that this reliance on outside cash is going to be diluting their shareholders' value. And on top of those losses, space travel, you know, we all watched the NASA launch, and thankfully that worked okay, but it's not a sure thing, right? So execution risk remains extremely high. They need to deploy roughly 45 to 60 satellites by the end of 2026 to have meaningful commercial service. And do you know what they did last year? They did one last year. And this year they already launched one, and guess what? It's coming crashing back to Earth, or if you want to put it nicely, they're deorbiting a satellite here. So it's rendered unusual by incorrect launch. So insurance may be footing the bill on this, but guess what? They're not going to be writing the checks each and every time. Lastly, rivals, SpaceX and Amazon already have significantly larger capital base, their launch infrastructure, their operational satellite ecosystems, and they're competing against companies with much deeper pockets, faster deployment capabilities. It's going to be a huge risk, and that's going to pressure margins from ASTS even further. But let's get ourselves into the chart. So one of the things I've noticed here, we've got a daily candle up on the chart. When we see long forming candles, it's not uncommon for those patterns to play out over longer periods of time to get that full measure move. That wasn't the case in this particular. We have a long form head and shoulders pattern. The right and the left shoulder have both bounced off around the 101 resistance, signaling that it's maybe found a top in the market. Additionally, when we broke through and confirmed this head and shoulders, we had a $25 pullback that happened immediately, and in that large pullback, there was a bearish flag that's presented itself. If we can break, after we had the trade up yesterday, we broke down after earnings. That's projecting us to go down with the measure move down towards where the stock price was before this whole head and shoulders took place in 2025.
When you talked about, that space can be a dodgy proposition, things don't always go right, made me think about some of the verbiage they use around when something doesn't go right. The one I like the best is rapid, unscheduled disassembly. Rapid, unscheduled disassembly. The rocket done blow up. Mm-hmm. Yeah. All right, the bull case now.
Yeah, let's tackle that one. So, ASTS is solving one of the most important problems and underserved problems in modern life, and that is connectivity. So basically, imagine a world where coverage exists on every road, mountain, ocean, or developing region. You have no towers, no special hardware, just your phone and the sky, and that's it. So the scale of disruption you're looking at, this isn't just another satellite dreamer. It's a company that's turning dead zones into dollar zones, in fact. So here's my bullish take on it. When you look at commercial satellites now in orbit, they have a high level of mobile network operator partnerships secured, and a pathway to monetization is quickly forming as well. So let's talk about the TAM first, which is the total addressable market. There's nearly 3.5 billion people, or 42% of the world's population, that have little to no access to mobile communications. Now, given that this market opportunity represents 1.1 trillion a year, AST is launching, as we know it, let's call it space cell towers, essentially, broadband network, but without any additional infrastructure or hardware required. Unmodified phones, you get the signal. Bluebird satellites, that's what they're called, that's what they launch. Are some of the most larger and more powerful that are enabled by the specialized custom ASIC chip that covers roughly 300 square miles and operates in a low Earth orbit, sitting at about 500 kilometers above Earth. This improves your efficiency, your lower costs, and expands data capacity. So low bandwidth, emergency-only services. But the best thing of all, unlike others, they offer 5G broadband speeds. 120 Mbps is what we're talking about. So you can stream 4K Actor Trader live, while you're sitting in the middle of the Sahara.
Nice plug.
Yeah. Nice plug. You can trade stocks in your fishing boat in the middle of the Atlantic, wherever you want to call it that. Second of all, the big thing is the business model. They've decided to do partnerships versus going out and creating own network themselves. They compete with the who's of who of network providers. We're boasting like AT&T, Verizon, Telefonica, Bell Canada over here. And they've got 1.2 billion aggregate contracted revenue commitments. This is not just LOIs, these are signed contracts that we have in place here. Let's look at the charts though. Of course, it's telling a little bit of a different story, but there is glimmers of hope in this chart that I want to point out. First and foremost, I just wanted to point out this bullish base trend that's forming over here in this purple line. So we are making higher lows, of course. We've just dipped below it today, but we do want to see it's just teetering right above that where it's propelled up and possibly going to touch that resistance. Also, we've got a falling wedge pattern. This is seen as a bullish reversal pattern. So usually the breakout would signal another push up higher. Again, we're seeing the pricing running up to that upper bound and looking to push up higher. When you look at the momentum indicators as well, we're still also shuffling in the bullish momentum area as well.
All right. Kieran's dream of being able to fish in the middle of the ocean while getting the internet, and Jay's vision of perhaps satellites not making it all the way into orbit. It's time to go head to head. 3 minutes, unstructured. Go.
Let's have it. So we could see after yesterday's earnings announcement, things didn't go quite as planned in the last quarter, but there's still some significant warning signs if we're looking further back at some of the results. Let me put some of these out to you. Net negative margins of 482% in their last earnings, suggesting a really steep uphill climb to profitability. Price to sales, based off of what we've seen in Webroker, 410x. That's significant. And then we've they've taken on a lot of debt, as I mentioned earlier. Right now, sitting at $2.22 billion, and this is an expensive venture to not only get your satellites into space, but also continue to maintain that web once you get it up into space. So that need for funding is going to continue to be there. Really kind of bring questions to what that balance sheet is going to look like going forward.
I'm going to point out one thing, especially when you have to realize this company is a hyper-growth company. So they're going to need a lot of upfront capital because there's infrastructure costs that are there. But remember, a net income number is very misleading because you have depreciation, you have amortization, all of these costs that get baked in, which is leading to negative revenue or negative margins, I should say. But what you got to look at is the trend that's important. They are currently coming in at revenue side. For 2025, they did 70.9 million. And of course, with yesterday's earnings report, they came in at 14.7 million, a little bit lighter than the street. But the year-over trend from that previous quarter was at 718,000. And now you've done 14.7 million on a year-over-year basis. The other thing is that management also said they're still confirming for the full year they expect to do between 150 to 200 million in revenue this year alone. So they're still committing to that trajectory that they have.
And profitability is still way out, though. It's projected to be 2027 at the earliest. And some of that revenue that you're talking about, it can be argued that was all based on timing of contract payouts as well. So it might be a little smoke and mirrors as we go. And if we're starting to think about...
But they've only got some pre-payments, Jay. It's not a whole lot of them. So there's still more that's stacked up with coming on there. Well, and talking about the dilution effect, because you did mention some of that, they are doing rounds, but what you have to understand as investors is if they're raising equity, you have to understand that what is the use case for this, and we know they've got deployment schedule set up to do at least on target 45 satellites for this year, and they're doing it on a quarterly cadence, so this is what they're raising it. So, and remember, this is not a new story. Amazon did the same thing in 1999. They're burned through equity when they were raising capital. Look where they are today. So that's something you got to realize. And then you mentioned there was a satellite that was falling somewhere recently, Bluebird 7, if I'm not mistaken.
That's right.
But remember, this was not actually due to the satellite's failure. It was Blue Origin, which was the rocket that was carrying up there.
We can assign blame, regardless.
So how many more satellites
do they need to launch this year? And they also need to have 90 satellites to give you global coverage. If we're talking about there's a risk with one satellite, there's a risk with all satellites, and that's going to be something that's going to be hard to match. And we're thinking about competition.
But think about
how many satellites does SpaceX have there? They have
SpaceX is different.
11,000 satellites.
SpaceX, you need a hardware. It's not easy for anyone to sign up on. And the second thing is their model is very different. Think about every mobile network operator. They have to build cell towers. Now they don't need to because of the square footage coverage that they get.
Sounds like a pie in the sky to me, but that's neither here nor there.
Passionate discussion about space. Never mentioned aliens once. Never mentioned aliens once. So there you go. Because it's not that kind of show. Thank you guys for laying out the bull and bear cases for AST SpaceMobile. Now we're going to turn to some options strategies to trade it. But before we dive into that, it is worth noting that options trading carries high risk and may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Jason, you started with the bear case. How could a bear possibly trade AST SpaceMobile?
Absolutely. So with AST, based on what we looked on the charts, if we're looking just to take a straight directional play, there's an opportunity here for us to buy a long put. And if we jump in to take a look at the charts just ever so quickly, that might be the best way to describe it. So there's been a support line around $67. If we're looking to buy something just on the other side of that, so we can buy it a little bit further out of the money, make it a little bit less expensive. If we can get that to break through that level, if we get that downward momentum continuing to project itself, buying a $66 put right now, these premiums, especially coming out of earnings, been very volatile. If we can get it for around $6.50, that still puts us well inside. If we look at my chart here, the expected move out to the expiration of the 26th of June is plus or minus $28. So for us to make profit on this particular trade, we're well inside that expected move. So we're buying the 66. We only need to get it down to $59.40, well below lows that we were experiencing, in the run up through early, late 2026. But in this regard, it's still relatively expensive. Like, take a look here at $6.60. It is directional. It must move in this particular direction. We have potential gains all the way down to zero. But this is a situation with the volatility of this particular stock. It's moved considerably over just a 1 year period. This could be an opportunity for an investor to layer in a spread and sell something a little bit further out of the money to lessen that premium load that you're responsible for paying up front. It's going to lower your risk, lower your break-even point, but it will cap your downside potential. So it would be for a less bearish outlook, but that could be your bear put spread. But with regards, if we're expecting a downward move, buying the 66 puts at 660 could be your play to get that in play.
But if Heron's right.
If Heron's right, one of the nice things with any debit trade from an options perspective, the cash that you outlay up front is going to be your max loss. So in this case, once again, wide spreads between the bid and ask is around 660 is where it was at the start of the day. So that's our max loss, but we're not obligated to hold it all the way through expiration. If my sentiment changes, or if I've achieved a loss that I'm willing to take, I can sell this back to close and walk away.
Okay, interesting possible strategy there. How could a bull possibly play this?
We're going to double down on this one trade, Greg. We're doing a double bull spread.
Bull spread.
Yeah. So part of the rationale with this, of course, as Jay mentioned, this is a very volatile stock in big, large candles that appear on the charts. So that does make the premiums, obviously more expensive if you're just looking to go long. So what we're looking to do with the double bull spread, I've got the charts pulled up here. We're still speculating on upside move over here. In fact, with the earnings, it's kind of fallen into quite an attractive range where the stock has previously bounced off. So we're looking to buy the 75 call, going out to the July cycle over here, giving us just shy of 2 months here. Selling the 100 above it, that's kind of marking a resistance area where it's rejected off in previous times. So this is a 25-point spread over here. Now, to reduce my cost further, this is where the other side of that trade comes in, and we've got a bull print spread we're selling below here. We're selling the 60. So again, this is eyeing another attractive level where we've seen if the stock does happen to go down here, it tends to bounce off of it. But it also means because we're selling a put, we have assignment risk, so we may not, it might be an attractive price to even get in on the stock if that's what you wanted to do. And then we're just capping out downside risk by buying off the 40. This is a 20 wide spread, so reducing the overall profile on the loss that we're going to have there. So this does cost $3.50 overall. It's actually lower just with where the stock is right now, so you can probably get in for around $3 a store, and that means we're looking at about $78.50 to $78 our break even on the top side. So we need that stock, you can see this green bar, to go above that price for us to start becoming profitable there.
All right, I saw your reveal trying to poke his head up there out of the bottom.
Let's do it. We're going to roll it up over here. So
What's
in
at
terms
stake?
of max gain, so the max gain again is on the upside. So what we need is for ASTS to get to $100. If that happens, we make the difference between the spread and what we're paying for it. In this case, is going to be $21.50, so $2,150 on a 25 wide spread. But because this is where the downside of this trade also happens, is because we're doing a double, we've got a credit put spread, we will lose money as soon as it goes below 60. So if it stays between the 75 and 60 zone, we're going to lose a 350. But if it starts going below 60, we start losing additionally. And the max loss could be when it gets all the way down to 40, we're going to be out our cost plus the spread. In this case, 23.50 is what we'll be giving up on this trade. And then, as I mentioned, assignment risk. You're going to have to pick up the shares if you think it's a good price to pick up at the 60.
Interesting stuff there, gentlemen. Thanks for that. And just a reminder to our viewers that these strategies and this debate were for educational purposes and do not reflect our personal opinions about the stock. Before we move on, Jason, you're going to show us how we can look at the extended hours charts.
Yeah, this is a unique feature within TD Active Trader that's not available on other platforms. If you're sitting at home, watching the news scroll by on ASTS, so the earnings come out, and you want to keep track of kind of how the stock's actually performing without needing to look at the bid and ask, maybe you're a bit of a visual learner. Let me show you how to do it. So jumping into the chart. Right now we're on a daily chart. I'm going to switch that to an hourly chart. So clicking on the aggregation and moving that to 1 hour. This is just going to be your regular hours during regular session. To engage extended hours, I'm going to direct you to click on this chart setting gear at the top of the page. If we go ahead and just under the general tab, there is an extended hours checkbox. Give that a check. We're going to see this change quite dramatically. The PM session will be highlighted in kind of this coppery color, and the pre-market session will be in the green session. All of the other areas in black, those are your regularly scheduled sessions. So what I had drawn on the chart previously was kind of the closing price for ASTS, and we can see and these are going to be hourly candles. So we can now track this down to see where the stock has gone. It certainly went in my favor, no thanks to me, but it went in the direction that I was arguing on behalf of today. And this is going to work if you're choosing even smaller segments of time, if that's going to be kind of more in line with your thinking. Maybe you can even go as small as 5 minutes. That's an opportunity for you to really kind of judge those really small trends. Keeping in mind, extended hours, there's not always as much volume that's going to be happening. That can lead to some volatile swings after hours and before the market, but this is your way that you can really keep an eye to here on the platform.
All right, great tool there. Thanks for that, Jason. We also want to highlight all the great resources available throughout May for Options Education Month. If you're looking to learn more, scan the QR code on your screen for access to workshops, featured content, and on-demand videos. Whether you're just getting started or looking to fine-tune more advanced strategies, there's something for every type of trader. And guys, what classes are you leading this week?
Yeah, so I'll kick it off, Greg. So we've got a number of things that are happening this week. I think the one thing I'll highlight today is, especially for someone who's getting new into options, it's a class on trading options in a small account. So this really just tells you more about risk, position management. If you don't have a lot of change to spare, how do you still be able to get into options? Well, this is a class for you at 1 o'clock today. And then we've got one we feature quite often is an iron condor strategy. So Brian's going to be hosting that class tomorrow afternoon. So if you want to tune in, actually in the morning, I should say. And then we've got another popular strategy called the wheel strategy. So this is kind of a circular wheel. If you put on a trade, you sell some calls, you get assigned, you sell some puts to buy back the stock, and it continues on and on and on. So we'll tell you all about that trade. And then finally, I think it's you, Jay, maybe on the end of the week, or maybe it might be Brian. There's a weekly Q&A question, open session. You just get to ask anything riff-raff with Brian and whoever's on the other side of that. Ask your burning option questions there.
What about you, Jay? How's the month going for you so far? Busy man?
Yeah, busy man as always, but most especially during OAM. But one class I want to highlight, if you don't get enough of this fine-looking gentleman and myself, on this show, we've got a weekly series during Options Education Months. Every Thursday at 3 o'clock, we're kind of doing what we're doing here, but over the course of an hour, we've got a chance to kind of talk through our positions.
Nobody does this to you?
I don't got
anybody.
You get rid of this guy and his bell, right?
Yeah, exactly. But anyways, we're analyzing the charts, and we're assigning and picking appropriate option strategies based on what we're seeing. But what's really neat about this is we actually placed a couple trades like in our last week's session, and we're going to be living and breathing through the management of these trades. Maybe rolling, maybe closing them out if we want to lock in gains or limit our losses, while still continuing to manage the portfolio of options that we choose. So once again, that's our we're calling it Chart First, Trade Second. That's every Thursday at 3 o'clock. So come join us in Webroker.
Trades on the practice account?
You got it.
Okay, I was going to say, Jay's suddenly just like waving his money around. It's on the practice account.
Not recommendations.
We also want to hear from you during Options Education Month. You want to email us, td.activetraderlive@td.com. Send your questions, feedback, or topics you'd like us to cover after each show this month. We're going to select one lucky viewer to win some of this stuff right there, all laid out on the desk, the TD Active Trader merchandise we have, including that mat, which thankfully is hanging onto the edge of the desk there. Time now for On the Radar. Before we wrap up the show, we like to look at what's happening ahead for the week, what is on our radar, some of the key things investors are focusing on. Here in Jay, we go through these, I think in every cycle, there's about a week of slow period where we go, no financial news, no earnings. This is not a slow period.
No.
We got lots coming up.
Yeah, there's a lot. I mean, you talked it right off the top, Greg. It's inflation data week, of course. We had CPI numbers drop today, but we've still got PPI coming out tomorrow in retail sales. PPI is important for it's the producer price index, so it really tells us upstream pricing pressures and margin transmission. So we really want to do a comparison whether that number came in either higher, that means the producers are absorbing some of those costs, or if it came in lower, they're passing it on to consumers. So we're going to see how that shakes out. And then on the retail side of things, as you mentioned, we have energy and food costs. That's the big part of it. So how much is that going to go to the
mall and get myself some
Exactly. Someone's making concessions somewhere, so we're going to see that in the data, what shows up there. But then President Trump has a big visit that's coming up on Wednesday. He's going to be heading over to China to maybe make amends with Xi Jinping. So obviously, big ticket item on the agenda will be AI, rare earth materials, are all centered around trade. I'm sure he's going to have to play nice, of course, after the rhetorics that they've had. Tim Cook and Elon Musk will be part of the delegate, from what I hear. So we'll see what comes out of that. It was the first major trip for a U.S. leader in Beijing. Actually, he was the last one there in 2017. So it'll be a bit of a homecoming there. And then other than that, we've got the Fed chair swap over that's happening. So Fed Chair Powell.
Mr. Powell.
Papa
Hello,
Powell
Mr. Warsh.
is he's hanging up the proverbial boots, and Kevin Warsh should be nominated or confirmed by the Senate midweek this week to take on the helm. Remember, Powell will still stay on his
And not a full goodbye. He's just going to shift from the big chair down like further down the table,
he's going to be just further down the table. Maybe not calling the shots. He's just going to be on the podium, but he's still part of the decision. And then the last thing I'll mention, Greg, is a big IPO. We don't really cover a lot of IPOs, but this one's a big one, Cerebras, CBRS. It's scheduled to go on May 13, in fact, tomorrow. They make specialized chips for running AI inference and advanced AI. They compete directly with NVIDIA in this space. They're expected to be the biggest share sale globally so far this year, according to data from D-Logic. So that's one to look out for there. And then, since we're talking about his competitor,
brings us right into NVIDIA.
Yeah, let's talk about Mr. Jensen Huang. He's got his earnings. He's going to be on the docket. He's going to have to, talk about his report card. So again, NVIDIA is the world's most dominant maker of AI chips. They're reporting their Q1 27 earnings on May 20th, Wednesday. So that's almost a week from now. $1.76 EPS, up 117%. It still blows my mind how they maintain this triple, growth year over year, and revenue at $78.5 billion, up 78%. If anything is to go by with this earnings, SK Hynix, which is NVIDIA's HBM high bandwidth memory partner, they just reported profits up 400%. So if they're doing that, that just begs the question, what's NVIDIA going to reveal here? The big thing will be guidance. Management is guiding for $1 trillion in revenue from its Blackwell and Rubin AI platforms through 2027. Investors want to know if there's any more upside to that number. They upped that number last time. Will they do it again? The big thing is also right now is the theme is agentic AI. This is all about compute now, executing tasks. So NVIDIA is looking to see if we can raise its data center guidance, especially its CPU business now. GPUs is one thing, but this is CPUs where agentic AI really shines. And then the last thing I'll mention is obviously cost pressures and inventory concerns. So obviously they have supply chain issues. Is some of those cost pressures going to work its way into the margin numbers? And if they can talk more about that. They've made some meaningful headway because they also want to get into the entire AI stack with some key investments recently. $2.1 billion IRIN as a partnership to deploy 5.5 gigawatts, but also they just invested with Corning Glassware, $2.7 billion, so they're getting into optics as well. So they're covering that full stack now. It's not just about chips anymore. But if we look at the charts, Greg, it is telling quite a story. So we've had for the longest time, just going back to August over here, you can see the charts always been rejecting in this 190 to 195. And previously I'd marked this as a very strong resistance, but just most recently it started this shorter term uptrend, really respecting it, broke out of it. But the beautiful thing that you want to see on a chart is once you have the breakout, you want to see the test. And NVIDIA did that. It tested and bounced right off of that. So now we know this is a valid support area. And it's had a run up. It also cracked through the 215. I'm not quite marking this as a support yet. I want to see kind of retest that 215. But coming into this earnings, there's at least a good, I believe there's about a $30, $35 move expected on the either upside or downside here. So that could push NVIDIA to 250, maybe on the downside, come back into the support area at the 190 on the lower side of things.
Right, an important one to watch. Jason, over the weekend, I was barbecuing and I was living dangerously because I didn't have a backup tank. And I'm not sure how much propane is left in the current tank. And then I looked at when I was barbecuing on the lawn, there's some bare patches. Sounds like I need to go to a home improvement store.
I think you might. And even if Mother Nature is not quite cooperating with us yet, she's got her hands on the wheel. We'll eventually find herself there. But yeah, with that in mind, we're going to be looking at Home Depot. They've got their earnings coming out next Tuesday, May 19th. They're going to be doing before the market opens. But there's a few things we want to be looking at beyond just kind of you and I kind of sending our money their way. One would be margins and tariffs, right? So margins are kind of always a big topic of conversation, especially around retail here, but it's not the only pressure on margins. Supply chain costs and softer transaction volumes are some of the things we want to be listening for. Home Depot guided for operating margins around 12.5% for 2026. Execs say some of that is going to be achieved by bringing on more than half of their products being sold, being kind of domestically sourced, but investors maybe would want more clarity to see some guidance on pricing power from those the acquisitions here. The next thing to listen for is going to be their customer base. They've got a pro customer base and they've got DIYers like you and I. We talk about pros, we're talking contractors, builders, and tradespeople, and the pro segment has actually been kind of propping up the rest of the argument. So we want to see if that continues to grow and whether the contractor contractor activity is growing with as the housing market stabilizes, because they're often in kind of paying big ticket items. We're talking $1,000 and up projects, and they were actually up 1.3% in the last quarter, and that's actually pushed average ticket size purchases up 2.4% to just over $90. But the last thing we want to talk about is probably one that's going to move the needle on the most, and that's, we're talking comparable sales and consumer demand. Home Depot guided flat around 2% for 2026. If there's any adjustments, that's going to be big news, and that investors are going to want to hearing about. And we do want to be listening to see if there's any positive trends from a DIY spending, if that recovery. From a top line, we're expecting actually negative growth in terms of their EPS, down to $3.41. That's down about 3.9%. Revenues expected up by about a similar amount, up to about $41.5 billion. But let's move ourselves into the charts so we can see what we've got going on there. So since September highs, there's been quite a sell-off that's happened here with HD, resulting in presently to where we're at, down over 25% off of highs that happened in kind of late in the summer last year. It's been a series of kind of bearish signals that have kind of played out into the current reality. The one that I wanted to notice here is that back in earnings in November, there was the significant gap down. It was initially viewed as support. Since we've broken down through that, we've rejected off of that a number of times. Right now, we've got an inverse cup and handle formation that's formed for us here. If that does play out into its full measured move, that's going to bring us down below 300 for the first time since 2024. But if we get some positive results, so if DIYers are returning in droves, then that 340 level is going to be an important one to watch to see if we can get ourselves back up to that level.
All right, I like it. NVIDIA and Home Depot. Time now to decide, though, who's going to be arguing which side next week when we debate snowflakes. So you're in the hot seat today. I've got the coin. The big TD on one side is the bull. If it lands on the other side with all the little TDs, that is the bear. Let's give it a go and see what we get. What do we got? Oh, the bear.
The bear. Two in a row.
Some people thought this was incapable of flipping bear, but it's been flipping bear lately.
Okay.
There we go. It has been decided. So it shall be written, so it shall be done. That is our show for today. We're back on Thursday. Our guest is going to be Henry Schwartz. He is Vice President Market Intelligence at CBOE Global Markets. As always, investors should perform their own due diligence before engaging in trading. Thanks for watching.